Good evening, ladies and gentlemen. Welcome to tonight's video. We're going to keep it short and sweet for you and tell you exactly what's been going on, what is likely to happen next, but more importantly, why? Well, it's simple. Don't fight the Fed. That's the theme that we've been going with for quite some time right now. We're in a macro-driven environment, and Powell reiterated that today. Interest rates are going to increase. They might even speed up the time it takes for them to increase them. That's sad news. That's bad news. Now, we can be like, Perma Bear, be positive, Tino. I can't be positive if the money flow is not suggesting that. The yields have now inverted so aggressively that the reading is now minus 1%. And the last time it was like that was in 1981. In last night's live stream, we discussed about the LIBOR rate hitting 5%, which is the interest rate that banks borrow money to each other. The last time it did that was in 2007. Now, funnily enough, 1981 and 2007 are where there were two critical financial situations that happened, which did bring the market to its knees. But what does it mean now? Well, we know growth stocks and tech stocks are going to feel the pain. You can see what's happened to the NASDAQ. It's taken a bit of a nosedive. And in tonight's video, I'm going to break it all down for you, explore what Bitcoin has done, check out some Forex pairs, but more importantly, deep dive into the dominance of the dollar and try and help everyone be aware of the way smart money behaves. With that information alone, you improve the chances of not getting caught out on the wrong side of the trade. So if you are new to the channel, be sure to like and subscribe. Let's have a conversation. So we have Bitcoin on the 1 hour time frame. Today has been a little bit of a tricky zone. And you see, that's why I say, man, don't trade price action when Powell is speaking or whenever there is big news announcements. You get thrown about. But we did make a certain reference to a specific play within the hybrid system. Let's go over to the 1 minute time frame to have a deep look into that. Today, we were talking about the idea of a V-shaped play. We were anticipating Bitcoin to take the liquidity at the key 21,900 zone. Now, if we actually just go over to the high block itself, now prior to this, I haven't updated this just yet. The last update was at 2:30 today. Now, we look in the chart right here and you can see 21,500, there's $5.4 billion worth of long liquidations. Further up to that point, there's 2.8 billion at 21,950. Above that at 22, there's $4.7 billion worth of long liquidations. Now, the bookmap was suggesting to us that the liquidity was down below here, and we were anticipating price to come and attack that zone on the basis that they stayed below the VWAP, which was this white line. They started to hit the liquidation points up here. The delta, which are these red bubbles right here, started to come in aggressive. Then price attacks the zones. And it was at this point that we anticipated a reversal to appear. And that's exactly what had happened. Now, our price projection didn't come in successfully. We missed it by $26. We wanted 21,900. It came in at 21,926. Not bad. I'll take that. But here was the V-shaped play. So this was the V-shaped play that we were talking about today. We actually happened to get two. Earlier on, we were talking about price coming down here and the green vector candle waiting for it to get recovered on the 1 minute time frame. This is how the moves develop. They come down and recover that vector candle. So market maker induced traders to go short. They got shaken out with a retrace back up, which is where Mr. Market Maker hits the regions of the liquidation points of the retail trader who thought Bitcoin was going to break down because it broke that key structure on what a lot of traders were waiting for inside of this zone right here. Many traders were trading either the wedge patterns or bearish flags, you name it. They got faked out. Now, go back into the 1 minute time frame. Bitcoin then solidifies the range and attacks the lows. This is the start of another V-shaped play. How could you identify that Bitcoin was going to reverse? When you see the red vector candles closing closer towards the actual lows, then that's a good sign that the move might not actually be finished. It's when it doesn't close to the end of the move. Look at this candlestick. You can see the wick right there. The wick appears, suggesting that there's going to be a stop. And they instantly reversed it back up and you see price coming back into the vector candles. Again, notice something here? Patterns, ladies and gentlemen. Red candle, green candle, they recover the green vector. Red candle, green candle, they recover the vector. Then they slow it down, they instantly reverse it back up. Now, what does that mean? It means now we're waiting for price to recover another vector candle. So we remove all of this and look at the chart and we say to ourselves, well, where's the next vector to recover? Bang, this bad boy right here. Where's price? On its way towards that zone. Already recovered 50% of it, shifts away from the psychological low. The principle would suggest that we would expect Bitcoin to go down lower because in this zone right here is where they had commitment. And we know that because the book map shows us that right now there's nearly 705 Bitcoin orders at the 2187 zone. And then at 21,810, we have another 870 Bitcoin orders on top of that with another 291. So we're just over 1,000 Bitcoin orders at the 21.8 zone. But we know at 21.5, there's around $6 billion worth of longs. And when we look at the chart and expand it out a little bit, can we be on the assumption that that liquidity is going to still come into play? Looking down, you can see we've got 941 Bitcoin orders at 21,500. Now, what would lead price even more to the downside? Simple. All you need to do is go over to the news. This is what people are seeing. This is what Asia's going to react to. Powell sees higher peak for interest rates. So we know that the Fed is going to bring the pain. You see, it's all over the place. The yield. There's your curve inversion. Negative 1% for the first time since 1981. The importance of the yields is going to tell you where the flow of money is going. Let me bring it back to you right here. Go over to the 2-year yield. The 2-year yield, look at that, 5.017%. That is an unfortunate story right there. That is fear across the marketplace. The government is advertising, give us your money. You can now invest in a 2-year period and get 5% back. Are you mad? The sweet spot for the 2-year is 4%. That's what some of the big players on Wall Street are suggesting, that 4% is the sweet spot to start picking up stocks. But because the 2-year is shooting up right there and the 10-year is also moving up towards that 4% mark, there is chaos in the marketplace. All we need to do is go over to the dominance of the dollar and you can see, look, it's shooting up to all our zones. 105.250 nearly. Wow. That only means that the euro itself is taking a nosedive. Look at that. Coming back into one of our zones. And what does that happen to be? Green vector candle zone. Now, this was one of the projections that I shared earlier on to the patrons of the channel. But how are we understanding that this was going to play out? Why have I been bearish or I'm waiting for a markdown phase to happen? Let me show you this chart. This is the smart money, dumb money confidence chart. And to simply put, when the blue line's going down, prices are going up. Why? Because you can't buy if no one is selling, and you can't sell if no one is buying. So when smart money is going down, or this indication of it going down, it suggests to us that smart money it's selling. Yeah? Which is why the S&P, the dark line here, is moving up. Look at the difference. Blue line down, black line is moving up. Now, the red line, what does that suggest? That suggests retail. That's the dumb money. So when the red line is moving up alongside price, you know that retail is leading or fueling the move because smart money is selling into them. Now take a look at this. Can you see a W formation structure right here on the smart money chart? Last weekend, well, it was a couple of weeks ago, I shared a projection to the patrons of the channel. And what I do every Saturday is I give a weekly projection of Bitcoin, Forex, a couple of indices, and I just give my outlook on what I anticipate in the near future. Now, I pulled up this chart, and at the time of pulling up the chart, I had projected in my mind that I believed that smart money was going to start moving price down. In other words, this line to start coming up. But because of the way charts were moving, I sensed that we were in line for a structural shift. There was a manipulation happening. If you notice across all assets, everything seems to be coming to a high point and we've got an M formation forming. All right? Stick with me on this. Here is the post. So this is it, breaking down the narrative. Here's the chart. Down below, I projected the journey of smart money because everything has now formed a high. If you look at the chart, you can see right here that you have got the S&P trading at the high. Euro trading at the highs, pound at the highs, Bitcoin at the highs. Retail confidence at the highs. Notice there's a little M formation on retail because people are buying the dip, thinking that price is going to continue higher. But smart money has gone beyond this dashed line, which this is an area of extreme where we would naturally anticipate smart money to start reversing everything, to start buying everything back up, because that would mean prices going down, forcing retail to sell. So with our little projection right here, we were able to navigate how likely we were going to anticipate assets to fall in the near future. We go back to the real chart itself, and you can see that they fulfilled that W formation, moved up. Now we're expecting the retrace, which has happened because this is going to get updated tonight and price in what's happened today. And we should see the blue line shoot up and retail cross down. And then we will have this crossover, which is pretty much the make or break of this rally. Now, with that being said, going into the next events that are due to hit the marketplace, we've got Powell testifying again tomorrow, and we also have the ADP employment change and, of course, the JOLTS job openings. What does that mean? It's quite simply put. The ADP employment change is going to tell us how many people are effectively available for work. If that shows an increase, the labor market is hot. If the JOLTS job openings comes out and suggests that there are still more jobs being offered, the labor market is hot. And then Powell's going to be speaking at the same time as the JOLTS job openings release. It's going to be probably another tricky one. We might see price action stabilize today, but Powell today pretty much gave us the flavor and suggested that things aren't looking too good. Now, tomorrow I will be going live 2 p.m. GMT to bring the flavor again. I thoroughly enjoyed it, so if you are new to the channel, be sure to like and subscribe, and I will be checking in with you tomorrow morning. Take care of yourselves. Peace.